Did you know that writing off bad debts can significantly impact your financial statements and tax obligations? If you're a small business owner or an accountant, understanding how to write off expenses in QuickBooks Online is crucial for maintaining accurate records and ensuring compliance. In this video, we'll explore the step-by-step process of writing off expenses, particularly focusing on bad debts, and provide you with tips to streamline your bookkeeping. Before we dive into the details, make sure to check the description below for links to helpful resources and additional information. Now let's get started. What qualifies as bad debt? Bad debt refers to amounts owed to your business that are unlikely to be collected. This could be due to various reasons, such as customer bankruptcy or disputes over services rendered. Writing off these debts is essential because it allows you to maintain accurate financial records, reflect true income by removing uncollectible amounts, optimize tax deductions, claim deductions for bad debts, reducing your taxable income. Why write off bad debts? Writing off bad debts not only cleans up your accounts receivable, but also provides a clearer picture of your business's financial health. It's a necessary accounting practice that can help you avoid overestimating your income and ensures compliance with accounting standards. Setting up QuickBooks Online for write-offs. Step 1. Create a bad debt expense account. To begin the write-off process in QuickBooks Online, you need an expense account specifically for bad debts. Here's how to set it up. Log in to QuickBooks Online. Navigate to the chart of accounts by clicking on the Accounting tab on the left sidebar. Click on New to create a new account. Select Expense as the account type. Name the account something like Bad Debts or Uncollectible Accounts. Save the account. This account will be used to record any bad debt write-offs, ensuring that your financial statements reflect these losses accurately. Step 2. Create a bad debt item. Next, you'll need to create an item linked to this expense account. Go to the Products and Services section from the left menu. Click on New and select Service. Name this item Bad Debt and link it to the expense account you just created. Ensure that this item is marked as non-taxable if applicable. Save the item. This setup allows you to easily categorize and manage bad debts when writing them off. Writing off bad debts in QuickBooks Online. Step 3. Locate the invoice. Now that you have everything set up, it's time to locate the invoice you want to write off. Click on the Sales tab from the left menu. Select Customers and find the customer associated with the invoice. Locate the specific invoice that represents the bad debt. Step 4. Create a credit memo. To write off the invoice, you'll create a credit memo. From the customer's profile, click on New Transaction and select Credit Memo. Ensure that the date of this credit memo reflects the current year, even if you're writing off an older invoice. In the credit memo, choose the bad debt item from your products/services list. Enter the amount of the invoice being written off. In the description field, include details such as writing off invoice hashtag. Save and close. QuickBooks will automatically link this credit memo with the original invoice, effectively nullifying it in your accounts receivable. Step 5. Review financial reports. After writing off bad debts, it's essential to review how it impacts your financial reports. Navigate back to Reports from the left sidebar. Check your profit and loss statement under both cash basis and accrual basis accounting methods. You should see an increase in your bad debt expense reflecting the amount written off. This review helps ensure that your financial records are accurate and provides insight into your overall business performance. Best practices for writing off expenses. Tip number 1. Keep detailed records. Maintain thorough documentation regarding why each debt was written off. This can include communication logs with customers or notes about their financial situation. Tip number 2. Regularly review accounts receivable. Conduct regular reviews of your accounts receivable aging reports to identify potential bad debts early on. Tip number 3. Consult with a professional. If you're unsure about any aspect of writing off debts or its implications for taxes, Consult with a CPA or tax professional for tailored advice. Writing off expenses in QuickBooks Online is a straightforward process that can help keep your financial records clean and accurate while optimizing tax deductions related to uncollectible debts. By following these steps, setting up accounts, creating items, generating credit memos, and reviewing reports, you can effectively manage bad debts within your business. With that said, thanks for watching, and until next time.